Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the UK and the US have done a deal here, right? Which was, no surprise. Donald, middle of the night on Wednesday, can't help himself posting messages that some deal was going to come through. And so let's just have a quick look at the deal, right? And this is the dollar has really benefited from this, right? As in other countries may fall into line, and it gives you an idea of what the tariffs are going to be, right? So Britain's car industry, right? The tariffs were at 27 and a half. They've been reduced to 10, which is sort of along the lines of what he was talking about previously. Um, while levies on steel and aluminium will be reduced to zero, right? So that sort of gives the UK some stability with their whole setup. But this is the thing, and I mentioned this yesterday in the live trading session, right? Don't make trading harder than it needs to be. And what I'm talking about is when we look at the dollar, right? You look at the dollar here. Now, we had the UK, and this is where you can really sort of work this out. We had the Bank of England interest rate decision. Now, 0.25% cut was expected. Now, they did come out and said, we're going to be careful with our cuts from here. And basically, to me, if you go through that video, any sort of sign that they were on hold, it's hawkish, right? Sterling goes up. So sterling did rally, right? And as I was saying through that meeting, don't make trading harder than it needs to be, right? Trading is all about identifying what's going on in the market and then adjusting accordingly. And what I'm talking about adjusting is take the dollar out of the play here, right? Because, you look at some of these pairs. I mean, sterling has been, you know, everyone's piled in here. You get the trade deal and it's strong dollar, which everyone will be trying to work out. Do we buy dollars here? Do we sell them on the announcement of the deal? It was a strong dollar, ended up being strong dollar. Everyone that got long after the sort of basically the hawkish tone from the Bank of England have been hammered, right? You take the dollar out of play. Now, just on that, right, I was looking at sterling Aussie, and sterling Aussie, like the other sterling pairs, did rally. Now, we do have a situation here where the Aussie is under pressure because of the Chinese tariffs, right? So you get that move, nice move to the top side in sterling Aussie, right? Well, I was going to say no surprise. It stopped right on the trend line here on the hourlies, right? And you've got upward momentum on the daily charts. To me, sterling Aussie is a very good buying opportunity, and it's coming up to a really nice sort of momentum level on the hourlies. But, right, here's the big but. Before you go jumping in, right, we are looking at a situation where the Don is looking at having trade talks with China on the weekend, right? And he's saying it's going to be more substantial than initially thought, right? This could be a bit of a shit fight. So now, why am I sort of mentioning that? Because I'm looking at sterling Aussie as one of the easiest trade setups going around the market, right? And if we have a look at the live trade signals, it's still there, but we don't have the momentum at the moment. So there's lots of crosses here. If we take the dollar out of it, you know what? That's where trading becomes easy. Now, let me just tell you something else before I come back to China. Like most traders in each country trade their local instrument. So for traders in the UK, really the majors are sterling, or obviously against the dollar, but sterling Aussie, sterling Kiwi, sterling yen. Now, if you're in Europe, you're trading euro against everything, right? It's really the US where the majors do apply. And I think we've just been getting caught up in the whole dollar situation. You take Trump out of it, then we can look at the situation between the two different instruments, right? It's a bit easier because they're all got different tariff setups at the moment, right? Sterling have just done a deal. That's sort of positive. Aussie, well, this is where I was getting to, right? Before you rush in and start getting long Aussie here, just understand they have talks this weekend. Now, if they go pear-shaped, sterling Aussie goes through the roof. If they turn out really well, we're in a situation where, you know what, we've got to be a little bit careful here and just try and work out what's going on. Now, as I sort of mentioned yesterday as well, just coming back to it, right? Because this has been building. The US don't want to lose face. The Chinese definitely don't. So I don't know how they're going to do a deal that suits both parties. It could end up being a bit of a shit fight. So let's just see how it goes because I'm sort of looking at opportunities to get into the various instruments here. And the dollar, mate, well, it's tough. Excuse me. Now, if you are trading the dollar, right, look at the daily charts, right? These are still, where you can see clear direction. That's the easiest thing. And you go like, wow, okay, so the dollar really is still going down, right? If you look at the hourly charts, it looks like amazing, right? Aussie and Kiwi, here's the telltale sign on the daily charts. They look like technically they look terrible, as in like just discombobulated. There's no like clear direction. Everything else does, right? So let's just keep an eye on that as we go forward, because if you're just looking at the hourly charts and getting beaten up, right, get off the hourlies and take the majors out of it, as in the dollar pairs, and then start focusing on the other major instruments, right? That's my sort of big tip here, right? And it's a bit of a revelation for myself. I've been sort of looking, at the mainstream currencies we're always focusing on, but that's where the problem is because of the big variations in the decisions around the tariffs. Now, US Treasury yields slightly up. Equities had a sort of okay day. Nasdaq ended up 1%. The futures are down a little bit. But as you can see here, right, there's no uniform price action across the majors. And that's where you come back and you start looking at individual pairs, right? So, you know what? And not just looking at sterling Aussie. If you come through, now that we know what sterling is doing, right, get the sterling crosses up, even euro as well. It's sort of hanging in there as well, right? It's just connecting the dots. And then you can start to work out, right? Sterling Aussie's going up, sterling Kiwi, right? These are intrinsically tied to the Chinese trade talks this weekend. So, you know what? There's uncertainty there. As I said, if it goes pear-shaped, perfect to get long those instruments. Sterling yen, well, cruising topside. I mean, I tell you what, the beast, and you'll start to understand now, if you are looking at the yen and the yen crosses, why they call it the beast. Because when it goes, it just goes. And it looks for all money like it's going to crap out. And then it's already 300 points higher. Looks like it's going to go to the moon. Then it craps out. It's tough. Now, Euro Sterling, a little bit tricky. Sterling Swiss, a little bit tricky. And sterling CAD not really going anywhere, right? Focus on the easier instruments. And this is just an example of well, at least two, if not three easy ones, right? Because you look at the safe haven trades, right? They are like, think of the whole tariff situation, right? If Trump's done a deal with UK, then everyone's going to start falling in line, right? Takes out all the uncertainty about inflation, global growth. There's no big safe haven risk anymore. That's why we're unwinding the safe havens, right? Get some understanding around that, and that's where we are. So I tell you what is difficult for those traders in Canada in particular. Like we've just seen oil and or actually dollar CAD just sort of really catch up, and then oil sort of get back towards $60, right? That's just discombobulating as well. So we are seeing good opportunities. Like there will be good opportunities on the majors, right? But we just need the news to really stop being as variable as it is. Okay. So just as we go into to today's trading, all right. So let's just have a look at the Canadian numbers here, so you can get a grasp of that. These are the two main numbers, right? It's nicely they bank them together. Now, full time is a thing that you need to look at. The employment numbers for Canada are exactly the same outlay as they are for Australia, right? Commonwealth currencies and all that sort of stuff. Reuters poll, 2.5K change, right? Minus 40 to 25. Unemployment rate expected at 6.8, 6.7 to 6.9. Now, my tip is look for the CAD crosses, right? Don't go in foolishly. And this is another thing about China. Not only we got trade talks, their big numbers come out on the weekend when the markets are shut, right? They just do things their own way. And that's why I think the trade talks with Trump are going to be ugly initially, right? And then we'll see what happens from there. So keep an eye on the Canadian numbers. Canadian crosses are the go-to. And that's pretty much where we are at the moment, guys. Just like the connection between the bonds, equities, and the major currencies is a bit all over the shop. Keep an eye on the commodities, right? Aussie, Kiwi, CAD, right? Keep an eye on oil. It is worth focusing on because that's the biggest influence on CAD, especially as we come in to the Canadian employment numbers. All right, guys, I know there's a lot in that, but there's so much stuff happening. We just got to clear the smoke, the noise, and then you can find the good trades sitting in the corner, right? That's our job, right? Anyway, good luck today, and yeah, well, any discussions, we'll join you in the Discord. All right, guys, have a good one. All the best. Cheerio.